what's funny about this is the fourth public forum that we've heard Jay Powell speak in the last 2 weeks. So it was doubtful that you were going to get much new. I did think that there was a little discourse there when Francine asked everyone about if they would do the same thing that Jay Powell's doing in his place. And I thought Christine Lagarde's comment that yes, they definitely would, and everyone was nodding their head in agreement. I think it was an interesting acknowledgement. It must feel good for Jay Powell that at least his colleagues at other central banks thinks that the Fed at least is doing a decent job at their trying to deal with their dual mandate, and that had to make him feel good.
Ira, did we learn anything new about just how Powell is thinking about the impact of tariffs on inflation and the potential path ahead for monetary policy?
Yeah, so he's been pretty clear the last couple of weeks, and if you go back and look at his Humphrey Hawkins testimony, the semi-annual monetary policy testimony from last week, as well as what he mentioned today, is that they do expect to see an effect of inflation on inflation from these tariffs starting this summer. And when you look at some of the data that we received from May, for example, it did suggest that there are certain segments of the market and certain goods sectors in particular where you're starting to see at least a turnaround and maybe a little uptick of inflation. We'll get a bit clearer view of that in June, July, August, because remember, one thing is that in a lot of these sectors, there is a lead time, right? These aren't instantaneous hits to the prices that are input by importers. There's inventories that have to be drawn down at a certain price, and then now we'll start to really see over the next 2 or 3 months what that looks like. Now, interestingly, some of the work that we've been doing is looking at, okay, in aggregate, if you get a little increase in goods, but we wind up having these lower energy prices, will you wind up seeing that and the headline or even the core inflation measures? And the answer is maybe not. And I think that that's an interesting aspect of all of this, because we don't, in the U.S., with the exception of gasoline and energy, we don't buy a lot of goods really compared to the services that we consume.
Ira, I thought it was kind of interesting, Fed Chairman Jay Powell talking about the level of the U.S. debt, it's the level of the debt is sustainable, but the path is not. How often do we hear the Fed kind of talk about the U.S. Debt and deficits?
Since Alan Greenspan, every single Fed chair has said that exact same thing.
Okay.
And the thing is, when we looked at, Alan Greenspan's day, we were at 30% debt to GDP. Today, we're at 100% debt to GDP, more or less. So, we have seen a massive increase in the level of debt. When you talk about the level of debt not being unsustainable, I think that also matters for what interest rate environment you're in, right? You can imagine a situation where if interest rates are 300 or 400 basis points higher, I'm not saying that we're going there. In fact, I don't think we will. But that means that there is the possibility of kind of a debt spiral where you wind up having to issue a lot more debt just to pay the interest on the debt. We're not quite there yet, but we're getting there. And this is a big reason why a lot of people are focused on will the bill that's currently going through the Senate really lower the deficit or not. And I think that that's it is a real worry. And I think we're getting to that tipping point where it is a big concern.